welcome to a brand new edition of Market Fatafat right here on ET Now. I'm Cheryl D'Souza, and with me I have my by now co-host, that is Ashishji Sharma. Very good afternoon to you, Ashishji. And it looks like Friday is our day, isn't it?
Yeah, absolutely.
and the good part is the fact that neither of us are wearing the color red, but the markets are still in the negative territory. That's because owing to the negative cues coming in from the global markets as well. But we'll talk more about the markets in a short while from now. But for now, we have the management of Rishabh Instruments joining us on the show. We have Mr. Narendra Golia, who's the CMD, as well as Mr. Dinesh Kumar, who's the Group CEO at Rishabh Instruments. A very good afternoon to both of you gentlemen. Thank you so much for joining us on ET Now. And firstly, let us talk about your business model. If you could shed some light on your business model, who are your main clients, and how is the business of Rishabh Instruments going about?
Yeah, we are a Nashik-based multinational company. Our line is that we are a global energy efficiency solution provider, which means we are global. We have manufacturing locations in many countries. We work in the space of energy, mostly electrical energy, but we have other forms of energy also. And we help people to increase their efficiency. From that point of view, we have all kinds of electronic instruments where we measure the simple parameters like voltage, current, frequency, power, to the more complex parameters like swirls, dips, harmonics. We are a R&D focused organization. We actually divert the industry to modern methods. For example, all our instruments have communication protocol and different communication protocols. Our customers happen to be everybody who is using electrical energy. You know, from a simple residential place where you have a panel which distributes the electricity, to people like yesterday we had ISRO, landing on the moon. We have SpaceX who are using our instruments, all the railways, all the power generation stations, everybody uses it. So that is one area of our business. The other area of our business is aluminum pressure die casting. As you know, today plastics has come in a very big way. A lot of places people use plastics. It is easier to use, cheaper to use. But there are avenues where you have either high temperature, high pressure, where you cannot use plastics, and there is where aluminum comes up. Automobiles, automation, pressure sensing, temperature sensing. These are all avenues. Again, customers are all these large corporates who build them into their system. For example, a Siemens or a ABB for automation, or for a Valeo or Mahle for a automotive section, or in India we would have again the Siemens, ABBs and Schneiders of the world who would make complex systems to generate power, to transmit power, to record power, to optimize power. So they'll be our customers.
Okay, Mr. Musalikar, very good afternoon. This is Shrishti joining in. Wanted to talk to you about numbers, because from FY21 to 23, if you'll see, then your revenue has shown a CAGR of 12 to 13%. As well as if we'll talk about your bottom line, that has been quite stagnant for like 2022 as well as 23, which is 50 odd crores. So going forward, do you expect the revenue momentum to continue at this pace in the double digit? What is the expectation on that front?
A growth rate anywhere between 20 to 25% CAGR in the next 5 years, and we see this clear visibility in terms of our forecast and order books.
Right. Let's talk about what are your other capex plans, given the fact that you are looking to raise funds via this IPO as well. But going ahead, what are the other capex plans that you have?
No, we are expanding in all our areas. See, both the places, Poland and India, we do what we call as EMS. So we are increasing the capacity. EMS is a very big business. We do solar inverters in India. So we are adding a lot of equipment to make that. At the moment, it's a small business, but all of us know India is the solar capital of the world. Our government has a lot of focus, and we also know that it is the most green form of energy and the most inexpensive, except the capital cost. The running costs are very low. So from that point of view, we are adding both production equipment as well as testing equipment. It needs extensive testing equipment to prove that in all kinds of grid conditions your solar will work. So there we are adding equipment, we are running out of molding equipment. Dinesh just mentioned we are going to add a hall in Poland, we are going to add die casting machines in Poland, we are going to add molding machines in India. So a lot of equipment is being added to keep ourselves ready to what is coming. But when you are growing, you will also need working capital. Of course, we generate a lot of internal funds that should help us to fund our growth plans, but some of it is also coming from the IPO proceeds.
All right, thank you, gentlemen. We leave it there. Thank you so much for joining us on ET now to talk about your IPO as well as what are your plans going ahead as well, and all the best as well for the IPO. And that was the management of Rishabh Instruments talking about the IPO as well as the plans going ahead. But for now, let's continue talking about stocks, and a lot of stocks that are in focus in today's trading session. No doubt the markets are on a weak footing, but we have plenty of stocks to talk to you about in the next one. So let's bring on board our team of researchers as well as technical analysts for today. We have Aamar Singh joining us on the technical front on the show today, while on the research front we have Ashishji as well as Harsh. Very good afternoon to you, to all three of you. Thank you so much for joining us on Market Fatafat. But first up, let me talk about VST Tillers, and that particular stock is in focus in today's trading session. In fact, the stock has hit a record high levels. It saw an uptick of as much as 14% Srishti on an intraday basis. But from there on, it's given up some gains, but still holding on to gains of about 9.8%. The company has said that it has entered into a master service agreement with US-based company in order to jointly develop electric power tillers and also other agricultural machineries. On back of this, the stock is buzzing. It's actually gained for 6 consecutive trading sessions. So that's VST Tillers for you, soaring high in today's trading session, and otherwise weak market. That is 10% uptick on that particular tie-up.
Okay, let's shift focus to Bajaj Finserve now, and Aamar, coming to you for the second stock. Onto the technicals, you have picked up this particular counter, and no doubts there. Why so? Because this is the Nifty 50 stock gainer today. So tell us, what are the next stops or the targets for Bajaj Finserve?
I would say that Bajaj Finserve, we did see some sort of correction in the stock, but over the last couple of weeks, in spite of the market, the way the markets have corrected, this is one stock which has definitely bucked the trend, and also this week it's to close in positive territory, close to 2.5-3% on the upside. So sustaining above the 1500 and 1520 mark, that's going to be important because sustaining above the 1520 mark, the stock has a potential to rally towards 1580, 1600 levels. On the downside, definitely it seems to have formed a very strong base around the 1470, and I would say somewhere around 1450, 1470 on the downside. And technically, if you ask me, this is one stock on the medium term charts clearly shows that there could be a bounce back because it's moved from oversold territory. On the long term charts, the stock continues to be positive. Short term, we are seeing some sort of consolidation and some positive up move backed by good volume. So this is one stock one can definitely.
So that was Bajaj Finserve stakes on technical front. But Ashishji, coming to you to know about the news flow on Bajaj Finserve. Tell us more on that.
Well, yes, the stock is also in focus on the back of a brokerage note that has come in. Nomura, in fact, has come out with a note where they've upgraded the stock to buy from their earlier stance of neutral, and they've also gone ahead and increased the target price to 1815 rupees per share from their earlier target price of 1700. Nomura, in fact, says that the company is just more than just a lending business. Bajaj Finance's strong business momentum is expected to continue from here on. As far as the life insurance business is concerned, Nomura says that it is a fast-growing franchise, and general insurance will continue to focus on their profitable growth from here on. 80% of value for Bajaj Finserve is driven by Bajaj Finance, and they are positive on the growth prospects from here on. So on the back of this report that has come in, the stock is gaining momentum today. In fact, it is at the highest point of the day, 2.4% higher in trade for Bajaj Finserve.
That's all about Bajaj Finserve, but let me talk about Bajaj Finance then, because Nomura has come out with a note on Bajaj Finance as well, where they've initiated coverage with a buy rating. They've set a target of around 8,700 rupees per share. What basically Nomura has to say is the fact one of the things they've highlighted is that they initiated buy coverage because they are expecting to see a strong near-term tailwinds coming in for Bajaj Finance. Also, they are expecting the valuation premium to sustain going ahead. The other key highlights, what Nomura is highlighting in its note, is that the Bajaj Finance has been consistently delivering strong numbers. The execution also will be key in newer segments as well. Also, they're saying that they have a well-diversified liabilities and also exit of HDFC from the entire segment bodes pretty well for Bajaj Finance. They've also said that the fears of Jio Financial Services seems to be overdone and things will play out in the medium term in favor of Bajaj Finance. Also, they are saying conversion into a bank and inability to scale up new businesses are the key risks that they are seeing for this particular counter. But nevertheless, they have made sure that they repose faith in Bajaj Finance. So therefore, Nomura has initiated buy coverage, setting a target of around 8,700 rupees per share, which implies approximately 22.3% upside in the last closing price for Bajaj Finance. So that's the reason why this particular counter is in focus, Shrishti.
Okay, moving on to the next counter then, and with the markets, one particular counter is seen to be in the red, that is Shoppers Stop, down about more than 10%, and that's after the resignation of the MD and CEO Venu Nair, because this resignation has come in a bit as a surprise and the stock has fallen as much as 11%. That's the drop that we have seen the most in the past 3 years in a very single day, where Nair's resignation will be effective from the closing of the business hours of August 31st, and in response the company has promoted its CCO and CEO of Homestock, Karvindra Mishra, as its new MD and CEO. That's the news flow which is definitely market is not liking. Why so? Because Nair's resignation will be effective, but Nair will continue to guide the new CEO for the period of next 6 months. But the stock is definitely down in trade today because Nair has played an instrumental role in shaping the company in the post-COVID era by growing the strategic pillars of fashion, beauty, expansion of the company's retail segment, and he has been an instrumental part of the company. So that's the news flow on Shoppers Stop, and the stock is seeing no recovery since the stock is down about more than 10%.
All right, that's Shoppers Stop taking a sharp knock on back of their exit coming in from the MD and CEO. Yes, they have a new one, but yes, the street is not liking it as of now. But Aamar, let's talk about Federal Bank, and do you think the street will start liking this particular player in the private sector bank? How are the charts looking to you in the near term?
I would say that Federal Bank has definitely withstood the selling pressure which we've seen in the Bank Nifty and some of the major banking stocks. So technically, if you look at the charts from a long-term perspective and from a medium and a short-term perspective, the stock continues to remain strong and firm. And also what we're seeing is that volumes have also been more than normal over the last couple of days. So that also is a positive thing. And we've seen the stock break out of a consolidation zone. So somewhere around, earlier we could see around 125, 130, that was acting as a zone of resistance. The stock has taken that out, trading around 140 odd levels. So this is one stock one can definitely look at from a long-term perspective. On the upside, sustaining above the 144, 145 mark, the stock has a potential to rally towards 160 odd levels. From a short-term perspective, the stock has got very strong support zone coming around the 120, 125 levels.
Okay, moving on, let's shift focus to Manappuram Finance, because just yesterday this counter was also in focus on the back of the block deal. So Harsh, take us through what is the new update on Manappuram Finance.
Well, yes, we have the buyers and sellers, of course, and Quinag Acquisition FPI Limited, which held around 9.9% in Manappuram, has sold its entire stake from Manappuram. It seems the entire 8.4 crore shares have been sold at 140.5 rupees a piece. And what we've seen in terms of buying interest is you have the likes of a Chartered Finance Leasing Limited, which bought around 50 lakhs. You have the likes of a BofA Securities Europe, which bought around 62.5 odd lakh shares, around that 140 price band itself. So you're seeing some amount of buying interest as well. At the moment, the stock holding up despite that huge block coming out and being sold, down 1.3% as we speak, but will continue to remain in focus on the back of that. Some amount of course, foreign interest being seen in Manappuram in terms of buying.
All right, that's the take coming in on Manappuram Finance and why that particular counter is in focus in today's trading session. But Aamar, GIC, how are the charts looking for this particular stock?
I would say, talking about GIC, we've seen the stock bounce back significantly, and from around 140 levels, currently around 215 odd levels, and it seems to have taken out a crucial zone of resistance, because if we go back and see somewhere in January, it was unable to breach the 200 mark. So now it's comfortably trading above that level, 215 or so. And also what we see is that there's been a very significant increase in volume. So a lot of volume and delivery quantity has changed hands in the recent couple of days. So that clearly shows that the stock is in for an upside. But for any major upside, the stock needs to sustain above its recent high. So that's around, so I would say 220, 225, that should act as a immediate zone of resistance from a short-term perspective. Once the stock sustains above that level, then we could see the stock rallying towards the 250, 260.
Okay, moving on, and Shesha, tell us about KFintech Technologies. This counter is also in focus. Tell us what's the news flow in this one.
In fact, is soaring in trade today, over 10% higher in trade as we speak. It is slightly off the highest point of the day, but despite that, 10.2% higher in trade. Jefferies, in fact, has come out with an initiating coverage note on KFintech. They've initiated buy with a target price of 500. The stock currently trades at about 423 levels, indicating a nearly 18 to 20% upside even after the run-up that we have seen in today's trading session. Jefferies says that domestic opportunity for the company rides on financialization of savings. The company has enjoyed market share gains over the last couple of quarters. International alternatives are new growth avenues for the company going forward. And as far as revenue growth and cash flows is concerned, the company has reported good set of results over the last many quarters, and hence they have initiated coverage with a buy rating and a target price of 500. The stock in fact hit about 438 levels in intraday basis today. The stock of course is slightly off from those levels, sitting at about 423 as we speak.
All right, that's KFintech for you. But Aamar, Narayana Hridayalaya or Narayana Health, a better, simpler way to say it. How is this one looking on the charts to you?
I would say that the trend for the stock continues to be extremely strong on the long-term charts, on the monthly charts, or I would say even on the weekly charts. Weekly, we've seen some sort of consolidation, because between the 1100 and 1000 level, now it seems to have breached the 1000 level, currently around 1034, 35, and also we've seen that volumes have been significant over the last few couple of weeks. So this is one stock one can definitely look at. The stock needs to sustain above the 1050, 1060 for the next up move. Otherwise, we could witness the stock in for some consolidation. So it would be 950 on the downside and 1050 on the upside for the stock.
Okay, moving on, let's shift focus to Astra Microwave. Since the past so many days, we have seen all these defense-related counters in focus, and today Astra Microwave has a new order win news on this, where the company has backed a new order worth 158 crores, where the company will supply satellite subsystems, airborne radars, as well as subsystems of radar and EW projects. Other than that, what's interesting to see that from which organizations this company has received an order. So on that front, they have informed that they have received orders from DRDO as well as ISRO. So that's interesting to see on Astra Microwave, a new order wing from big organizations, and that's why you are seeing the stock still holding itself in green. It was high anywhere between 5 to 6 odd percent, but still holding a gains of more than 2% currently.
All right, let's talk about Ratan India then. And Aamar, talking about this particular counter, spectacular returns is what this one has registered. If you look at it over the last 3 months, 1 month, or for the matter of fact 1 week. If you look at today's gains, also Ratan India is seeing gains of approximately for 7% or so. Where do you see this one headed from here on? Do you think it will hold on to that gains?
I would say that from a medium-term perspective, we've seen some very strong momentum in the stock, and the stock on the daily charts is also broken out of a consolidation zone, because earlier it was unable to reach the 50 mark. So currently it's trading around the 57 odd levels, and also if you look at the volumes and the delivery quantity, that also continues to be, I would say, on the positive side. Going back in time, we see that somewhere around September of last year, it had made a high of 58.5, and prior to that, if we go somewhere around 59. So this 58 and 60, that's going to act as a zone of resistance for the stock. So for any further strong up move, the stock needs to sustain above the 58.60 mark. And if it sustains above that level, then the stock has a potential to rally towards its all-time high, which it had made somewhere close to 70 odd levels. So that around 12-15% rally would be possible once the stock sustains above the 58.60 zone, because the momentum as well as the market structure for the stock remains positive even on the long-term basis.
Okay, moving on then, and Ashisha, Sirma SGS is the next counter that you have picked up. Tell us what's happening on this particular name.
Well, yes, we have some management commentary that has come in from Nuvama Conference. The stock, in fact, as we speak, is up nearly 7%. The company has reiterated some long-term guidance where they say that the long-term aspiration is to achieve 1 billion revenue, 25% ROCE, 25% of which will come from ODM segment, and a third of its business could come from exports going forward. As far as their margins are concerned, the management also reiterated their guidance of double-digit EBITDA margins. They said that they are focusing beyond the short term, and R&D subsidiary has also been carved out to pave growth going forward. Capacity expansion at their Chennai and Hosur plant is intact. So several takeaways coming in with respect to company's growth roadmap going forward. Apart from this, there's some management change that has also taken place, where they have appointed Satendra Singh as the CEO of the company. But largely on the growth roadmap that the company has highlighted, the stock is gaining in trade today, 7% higher in trade as we speak.
Alright, so that is Sirma SGS for you, but time for a short break on this edition of Market Fatafat. But